Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hello everyone, checking in on the MJ space. So the update for today is the US MJ sector is in full-on dump mode with things getting to extreme levels. And we've got the Canadian government coming out and saying tomorrow, 12:30 p.m. Eastern, we're going to get some updates on legalization and regulation of cannabis. My assumption is that's going to do with perhaps some more details on the edibles aspect of things. But either way, keep an eye out for 12:30 p.m. Eastern to potentially see the Canadian MJ sector react to whatever we're going to find out in this briefing. So we'll get to the US MJ sector at the end here, and I'm going to cover IAN last because I'm probably going to talk about it the longest. So we'll run through the Canadian names. Not a whole lot of crazy action out there on the Canadian side of things. The S&P 500 still holding on pretty well. A little bit of a consolidation day after a stronger start, but bulls still holding on just fine. CGC, I am debating where to put my stop loss now. So I did not get stopped out today as we have a double bottom with the last 2 days. And really the scenario that I find myself in is, number one, do I want to get stopped out and lock in that profit? Or do I want to give the bulls a chance to form a higher low and a higher high? And I just answered my own question in my head. I am going to keep my stop loss at the same level. If we see this double bottom break, I will exit, take my profit, focus on the US MJ sector bounces, which is where I have more interest as far as opportunity goes right now, and then I will pay back attention to CGC if we do get a daily higher low forming in the near term future. The more we pull back, the more the likelihood of an equilibrium is, and the less we pull back, the more likely continuation is. So closing near the low of the day definitely favors the bears, and if 41.55 breaks, we're going to scout a daily higher low, perhaps closer towards $40 psychological support. Cron started pulling back today. Broke the inside bar bullish first thing, but that's one of those moves where it's just a very quick... I need to see what that after hours action is. Looks like we're a bit higher, but it was just a very quick 1 minute candle. And really it's just literally 1 minute of a bull push to break the daily inside bar and then all bearish action following that. So there's no doubt that 1 minute candle is designed as a fake out. That's why for me personally, I generally do not trade in the first 15 minutes of the day. I find a lot more clarity after that first 15 minutes, unless it's a very clearly defined play where I'm looking to buy a gap down open or something along those lines. But we ended up pulling back on the daily for Cron and breaking the pattern of a higher low every day for the first time since this bounce started. So now we can say daily consolidation to find a higher low is underway. The hourly RSI got real close to oversold. Again, we look for the hourly RSI to hit oversold to be scouting for a daily higher low to form. But at this point, we didn't quite get there. And the fact that we bounced a bit, we can definitely see another leg down is the bottom line. So we're watching the daily chart. I would say, again, we're just watching for, is it healthy consolidation leading for continuation? I would say if the bulls can continue to close above these exponential supports, then that would keep the continuation possibility favored. If we break below those levels and drop down towards 15, that's when the equilibrium scenario is more likely. So similar to CGC in the sense that we're looking for either continuation or an equilibrium. The more we pull back, the more likely that equilibrium will be. APHA, so no longer the cup and handle scenario. The inside bar broke bearish. So we're looking at a likely higher low compared to 629. We have our high, low, lower high, and now we're scouting our higher low. Is the hourly oversold? Is the hourly RSI oversold? Not yet. If we see another leg down tomorrow, we will be looking at hourly oversold conditions, and we are anticipating a tightening daily range. So the fact that APHA has pulled back more significantly than Cron and CGC increases the odds a bit that Cron and CGC will follow and stay in tightening daily ranges as well. And these tightening daily ranges may play out through June and into the start of July before we get a clear break. ACB, also already in a tightening range. It's coming down to key support. If we break 745, just the low of 713 is there. If we can hold 745, we'll stay in this daily equilibrium, and we would look for a lower high compared to 807 and for things to continue to tighten up. We can see ACB is the tightest right now. because it started forming this pattern days before we topped out on CGC and Cron and these other names. So we'll look for potential clues here as well. And again, the individual names can give us clues for the sector as a whole, just like GTII in the USMJ space. After we had all these MJ names trading 6 days, 7 days sideways, GTII dumped down first, and now today a lot of other names are dumping to lower lows following along with that break. So again, clues as far as shifting the odds of what is most likely. TLRY. So the daily higher low is trying to form here, but we're certainly not getting much bounce follow through. And as we know, to confirm a daily trend change, we need the higher low and higher high. And right now we're looking right back down to support. So did we change the hourly trend? And the answer is no. We had our low yesterday, high of the bounce at the end of the day, started with a quick bull move just like Cron, and then pulled back. We did not confirm the hourly trend change with any clear higher low and higher high. So the confidence that our daily higher low has been established is not there. We're looking back down at that support. We pretty much have 40.40 and 39.43 as two short-term levels to be watching. And if those break, there's a gap to fill at 38.98. OGI, bear break and follow through under, well, not much follow through, 677. So again, if this scenario plays out again where we break support and don't get much follow through, if we see a green day tomorrow, it'll be notable that supports are breaking, but the bears are not getting much follow through, and we'll still be watching because it is still a weekly uptrend at this point. Break 666, and then that would change and we would lose the weekly uptrend. But as of right now, if the bulls can hold 666 and get another daily bounce going, that's pretty much the ideal scenario of what bulls want to see. When you break support, a bounce happening shortly after, right after ideally, is a scenario where bears don't get follow through, and the potential for the weekly uptrend is still there, but certainly not holding our breaths for the bulls to hold this uptrend with what the sector as a whole is currently doing. Hexo, dumping down to lower lows, bearish reaction to earnings. So now we're looking at 588, and we actually did break that support level already. So the weekly chart has now lost the higher low pattern. And we're now looking down at the next clear level of 510. That's a ways away. And if we look at the monthly time frame, we're looking at monthly consolidation. Anything above 302 is a monthly higher low. And just like a lot of other names, we're watching the 12-period exponential support, although it means less to me on Hexo. Why does it mean less to me on Hexo? Because we closed below it already, whereas other names like Cron, every bounce on the monthly higher lows has held that monthly exponential 12-period support. So again, just a comparison, for any moving averages, if I see a stock that does not respect those levels shouldn't matter to me. If I see a stock that respects it every time, I'm going to be paying attention to it. So again, that's the difference. I am watching it, but knowing that Hexo closed below it once already, definitely, and we've also bounced right off of it twice, so I'm not ignoring it, but I'm taking it with a grain of salt. So we'll see if Hexo gets to daily oversold conditions. We're approaching it. TRST, again, looking just like USMJ. And with the bear break and close at the low of the day, on the verge of daily oversold RSI, weekly time frame 594 is the support. We're still 12% above that level right now. And it looks a lot like the setup of IAN, just in the sense that, well, IAN broke support today, which we will look at in a second, but we're coming right down to this support level, and there is potential it could line up where we see the weekly RSI right on the verge of oversold. But if this dump continues another couple days, this daily RSI will be real beat up, and we'll see if there is a play off of 594 support. If you drop another 5 to 8%, the risk to reward scenario off of that support certainly becomes more attractive as the daily RSI gets more crushed. So again, close at the low of the day, sector as a whole getting beat up. VFF pulled back today, and then the bulls shifted momentum with a long lower wick and a bounce. So the question is this our daily higher low? The answer, have we changed the hourly trend? No. So tomorrow, if we cannot break 1310, we have an hourly equilibrium to be watching, and we will need a higher low and a higher high to confirm an hourly trend change, and then we will have our daily higher low established. So right now, it's a tentative 1224 as our higher low, and this range continues to tighten. It's certainly holding on a lot better than a lot of other individual names out there, and we're going to be watching for a break of this daily tightening range late next week or early the following week. T-God. So T-God's down at the low, and we got 334, so we did break support, and the next support level is 306. The bears are in complete control right now. We're looking for a monthly higher low, but there is no sign of it. And the daily RSI is not beat up and not really much weakness today comparative to the names that are flushing below clear levels. We did form a daily inside bar with a double bottom at the low of yesterday. So a lot of beat up names out there. Who's holding up the best? Our leaders, CGC, Cron, even APHA and ACB are at least having, and TLRY, a couple support levels nearby, and VFF as well. If I had to just distinguish Canadian MJ names, those names all go on one side, and all these names dropping to lower lows go on the other side for weakness. We also have all these low cap names getting crushed. CXXI, Tilt, whatever side of the border it's on, low caps getting absolutely crushed. And this is one of those cycles. So again, we've been through these cycles before. If this is your first cycle, and by cycle I'm meaning euphoria to fear and despair to euphoria to fear and despair. And at this point, as far as the MJ sector is concerned, I've probably gone through maybe 6 of these, going all the way back to 2010, 2013 in the penny stock world. If this is your first one, it's scary, it's new. It usually comes with a big loss or a big amount of giving back profit to get comfortable with these major cycles and complete sentiment shifts. And it's fascinating to watch once you get comfortable with them, just how it happens and how people react and emotions. It's why I love this game, the whole psychology aspect of it. Of course, the money is nice as well, but the psychological aspect and human emotion, it's why technical analysis and Japanese candlesticks have been used for literally hundreds of years, because human emotion does not change as far as is the cycles that it goes through. And we are now in one of those bearish cycles. And as I talked about with news, let's just look at CVSI for a second, partnering with Kroger, and here we are lower than when that news was announced, essentially, or right where that news was announced less than 30 hours ago. So it's a market environment where bad news is magnified and bull news is disregarded. A lot of people are comparing this dump to what we saw back in December. The biggest difference right now is the catalyst for the bounce in December was the market as a whole. There was fear. It was a fear cycle, not only in MJ, but in the market as a whole. And that bottom of SPY marked the bottom of USMJ, which then went on hundreds of % runs. And it marked the bottom for Canadian MJ, which went on their own significant runs. So we don't have that kind of catalyst right now unless, for the US sector, if we got a surprise pass in New York, which I am not expecting, which the market is not expecting, that would be a catalyst to mark a temporary bottom. But as far as an individual event, it's probably just going to come out of nowhere again as just that cycle. And really what it will be is nobody left to sell. And that's when we start to bounce. When there is no one left to sell, sellers get exhausted, the bears run out of momentum, and that's when it turns around. So that's what we're keeping an eye out for at this point. And it's a different setup depending on what you're looking at. So I love oversold bounces, as you know, which is why I am very interested in the USMJ space at this point. And I'm interested to the point that I start using accounts that I reserve for when things get really extreme, whether it's my personal retirement account or whether it's the TCG account. That's now something that I'm looking to drop that capital and put it to use. Otherwise, it just sits there and the cash just sits there waiting for a high probability scenario. So let's talk about high probability scenarios. We know bounces are likely coming in the near term, but we always have to protect on in case it doesn't, because it is absolutely possible that we form daily bear flags. We have a weak bounce, we cool off RSI, and we see another leg down. I am always reminding myself another leg down is absolutely possible whenever I'm looking to play an oversold bounce, because that keeps me from getting in too heavy, getting too large a position, running out of bullets as far as having cash on the side. And essentially, my most comfortable oversold bounces are when I don't have my maximum position. I don't want to be in a maximum position. That means I don't have any cash left to apply to that trade, and my hands are tied. When I have cash left and when I'm scaling out into strength, that's when I'm in control of the trade, and that's when I am most comfortable. So let's look at individual names now on the US side of things. So Curaleaf is still holding on. We can now separate two groups on the USMJ space, who is holding support and who is in all-out dump mode. And right now, Curaleaf is holding support. We have a triple bottom just around 10 psychological. Short-term resistance is 1070 and then 1193. Bulls have to break 1070 to prove anything. And if we get a bear break of 995, we're going to look down into this gap with 890. Nope, the gap fills at 923. Again, just monthly consolidation. You look at this monthly chart, we were overdue for a pullback. Let's look at CGC. just because everybody's comfortable with CGC. It's the leader of the Canadian MJ space. We have seen some massive pullbacks. I pointed out in the video yesterday, CGC pulled back 65% to 490 before running 1200%. We then pulled back in 3 months, and CGC is more extreme because it's traded on a higher exchange and there's more participants and more volume. We pulled back 58% in 3 months. Look at this move from the all-time high. The move from the all-time high in CGC to drop this 48% took 2 weeks of trading. So about 10 trading days, maybe 11, to drop 48%. That's the same percentage drop that IAN has dropped over 3 months. So while we look at IAN and we say, man, things are absolutely crushed, it is so beat up. I mean, we saw CGC do that in literally 2 weeks. So that's what I'm talking about, where we get veterans in this space. And hopefully we learn from our mistakes. But when you see these cycles go through again and again, we say, oh, well, here we go again. Just need to be patient. There's going to be significant opportunity on bounces. And we just have to look out for short-term signals that those bounces are getting underway. So knowing that the leader in a massive industry that's getting the floodgates open for the first time is going through these cycles, then absolutely everybody is going to be going through these cycles. So CWeb dropped down after trading sideways to a lower low. We're looking down at 16 psychological. What's the monthly time frame? That's what I want to know on every individual name. The size of the pullback, we are absolutely, when we do find a bottom, we're not going to look to be any heroes and hit all-time highs anytime soon. We're just going to look for a bounce and a monthly lower high to be set. The question is, can the bulls hold 1080? And I'm saying it's very likely that we will, and that we will form a monthly higher low compared to that level. And the reason I'm saying that is because that's still another, 30, 40% before we even get to that support. 32% after dropping. Essentially, to break that support, we'd have to see a straight shot of 70% down, which is possible, but I don't think that's the most likely scenario, which is why I'm scouting for monthly higher lows in most individual names. IAN lost its monthly higher low today. That's notable for me. That doesn't mean I'm selling on the loss of support into extreme oversold conditions. What it means is it shifts my outlook. So the news for IAN, the shifting or the changing of the options, that doesn't change my outlook on the company at all as far as what I would want to do having a longer term position. The monthly support break definitely does. That's much more important to me. So that doesn't mean I'm not going to trade IAN. It doesn't mean that I'm not going to have a long position, but my allocation of capital, I'm going to have larger positions in names that are stronger on the monthly time frame, and the position size that I have in IAN when it's all said and done will reflect the fact that it did break that monthly support. I'm certainly not going to ignore that, and it drops a notch. Technically speaking, that chart setup is not as bullish as a lot of other USMJ charts, and neither is CWeb. The size of this pullback on CWeb, again, the most the bulls are going to hope for here is an equilibrium, and if we look at Curaleaf, this is a much stronger healthy chart looking for a monthly higher low, just like Cron is as well. Cron's monthly higher low, pretty healthy overall. No red flags there for me. Volume notable as well. So, Curaleaf, at this point, is the strongest monthly chart that we've looked at. Let's keep looking at them. MedMen, good job holding on, so it's not in the category of names dumping to lower lows. We're looking at an inverse head and shoulders pattern. Still possible at this point, as TradingView is making my drawing skills even less impressive. But we're looking at 311. If 311 breaks, we have our first daily trend change in a long time, but we better be sure that 321 breaks as well to have confidence. So I could potentially look for an entry on a 311 break, but if we don't break 321 shortly after that, that's a red flag to me, and I would become much more protective of that position. Just be aware that if this pattern does confirm, we zoom out to the weekly and we know a weekly lower high is still very likely to form because anything under 422 is a lower high. TRUL is one of the names dumping to lower lows after this sideways trading. Another thing that I want to talk about is past history. We can look at past history and past dumps, and I'll do so on IAM, which I'm going to talk about more, but we get information from that. Look at this sideways trading. This is back in May. We traded sideways for 7-8 days or so, and then we saw another dump down, and things got ugly. There were gaps involved. There was big bear volume. We got to daily RSI hitting 30, and now we have a very similar pattern. If we're just going to zoom in and use our microscopes and look at this right here, perhaps that is exactly what we're going to see right here. 7 trading days sideways, a drop to lower low, this day would be lining up here, maybe get a gap down tomorrow with a big red day, and then a bounce starts. What did the bounce look like? What were the clues on the shorter term time frames? These are all things that you can investigate on your own, having some previous price history very recently of very similar action that did lead to a really nice bounce opportunity. It certainly was not a long-term bounce, but we went from $14.55 up to $18 with some significant moves there, which is what, 320+%. ZYNE, also a nice job for the bulls considering what the sector did today. Didn't get a ton of follow through, but we held support. It was a scenario where we broke resistance first thing. It pulled back just like everybody else, but a decent recovery there. And at this point, if we see a lower high and can't break 14.11 and then drop down and break 13.06, we would lose the hourly uptrend. But the hourly uptrend is still intact here. We had the low, higher low, higher low. So that's the most important short-term support, 13.06. And as long as the hourly uptrend is intact, the bounce has not topped out on the daily time frame. Lose the hourly uptrend and our daily top has been set, and we have to pull back to form that daily higher low. So certainly in its own category, if we're going to separate these, it's Curaleaf holding support, ZYNE doing its own thing, definitely stronger than most everybody in the USMJ space, except for IIPR still doing its thing, and IIPR hitting all-time highs over $100 today. And MedMen is another name that's not breaking to lower lows at this point. OH is in dump mode. I'm starting to get interested in OH. I love when things are this red and this bloody, especially when I'm looking to play some bounces. So I don't have a position in OH. I was building a position in IAN today, but tomorrow, give me some red, break $8, and I am in. And I will be looking for just a short-term daily oversold bounce to set a lower high. We don't have much previous price action that is similar to this magnitude of a dump. The daily RSI is getting to the most oversold that it has ever been. It has been this oversold at the all-time low, essentially. But we're getting to levels. The daily RSI, let's see, let's do it all down. 23 on the daily. 4-hour is 27. Hourly is down at 25. You can see these little tiny bounces. Cool it off just a bit. 15-minute RSI, not too beat up because of the little bounces. And if we see another red day, those RSI levels getting down to 20 and the teens definitely has me interested to begin scaling in. What would be my game plan from there? Again, we always have three options. Well, we have more than that. If we're looking bullish, we have three options. We can, number one, play an oversold bounce and lock in our profit when we have it, knowing we're playing counter trend and knowing a daily lower high is going to form. Number two, we scale out half of a position into profit. We put our stop loss below the low, ideally wherever it was, at a break-even point, and we try and nail a longer-term entry. And that's what I did with Kron. And again, if you want to go back and look historically, it didn't end up playing out ideally because of this dump before the upgrade. But if you go back and look at the video, and that's what I love about these YouTube videos chronicling every day, go back to May 9th and May 10th and see what I was talking about and what my game plan was, because that's what I did. I scaled out into short-term profit, and I wanted to nail this monthly higher low. I was confident that a monthly higher low was coming due to the volume makeup here, and I wanted a position. So I sold partial profit, which allowed me to put my stop loss at break-even under 1390. And then once this bounce started to play out and where the overall market stood, I decided to move my stop loss up, and I would have got stopped out anyways. So I ended up locking in profit. But now that this move is playing out, I know that I just missed it. And I'm not going to beat up on myself and say, oh, I should have held or I should have done this differently. I can say to myself, in a slightly different scenario, I would have nailed that monthly higher low and done so in a very protective way that kept me in complete control of that trade. So that's a practice run for me. And now I can potentially look to do the same thing in these USMJ plays. So let's just say, hypothetically speaking, if OH gets down and breaks $8 tomorrow, let's use some nice round numbers. I make an entry at $8 and I make an entry at $7.80. My average is now $7.90. Let's say the bounce gets going on Monday, or maybe end of the day tomorrow into Monday, and just like that, with even just a small bounce, let's say our low ends up being $7.65. And even with just a small bounce, getting up to $8.60, I would be comfortably profitable. I would have a break even of $7.90, and if we're up at $8.60, I would take profit before that. Let's say $8.40. Let's get a little bit less ideal of a situation. So we drop down to $7.65. I get two positions filled with an average of $7.90. I exit half of my position at $8.40, protecting myself in case it is just a daily bear flag to drop to a lower low. I then made 50 cents on half of my position. So that means the break even of the second half of my position now is down at 740. I can put my stop loss below the low, meaning if we see a lower high and lower low, I'm risk free and I will exit that position. But if this bounce gets followed through and then we get a little daily trend change, maybe some good news out of the US, which would be timed wonderfully, then I have a position to potentially look for the monthly higher low forming. And OH has held this monthly exponential moving average support every single time it has ever been tested in the history of the stock. And we're talking 2, 3, 4, 5, 6, 7 months. This line has been touched and not closed below. So all we would have to see this month with 2 weeks left to go is enough of a bounce where we would look to close above 865. That's a 5% bounce from where we stand. And considering the dump that we're seeing on the daily, certainly not out of the question. So that's scenario number 3. No, number 2, where I lock in some profit, get real comfortable, and get in control of that trade and try and let it ride longer term, knowing that the monthly uptrends are still intact on most of these names and trying to form monthly higher lows. Scenario number 3 is you make an entry and you put your stop loss at break even once the bounce gets going and you don't take any profit. It's a little bit higher risk, higher reward scenario, and you hope to turn things around. But in my strategy, I always pretty much do number 2 unless it is not in a monthly uptrend, in which case I would probably take all my profit on the oversold bounce. CVSI. So again, that news completely wiped out as if it never even, well, I guess it is still as if it happened. Let's see, what price was that when the news happened? Okay, so we're still above that point. But still, to give all that back, and here we stand about 4% higher than when that news was announced, is completely dictated by the overall market sentiment, in my opinion. Overall sector sentiment, because the market is not weak right now. Hourly time frame. I'm trying to find a time frame I like best. We're looking for a 4-hour higher low compared to 408. CVSI is in play for the bulls tomorrow if we can form a higher low. We only have support right now of 430, and then we're looking down at 408. So the lack of support definitely makes it a bit more tricky to find an entry. Look at the clear 15-minute lower highs. So perhaps breaking the 15-minute lower highs, we look for an entry, which would be our 4-hour higher low, and then we would just look for a bounce on a 4-hour lower high. But it would be a short-term shift that we are going to keep an eye out for after all the profit taking from today. As far as the longer term goes, if the bulls can't get back over $5, look how many rejections from $5 without being able to close above it. And have to close above $5 to change the momentum on the daily time frame. So IAN dumping. Volume is very notable. Probably one of the highest volume days, maybe the top 3 highest dollar volume days, combining both the CSE and the OTC volume together. And this is a different kind of bounce play because it's on the OTC and the CSE. We're not on the NYSE. We don't have extended hours trading like CGC has. We don't have massive volume, and we don't have as many people trading it, is what it boils down to. So the pullbacks are less severe. That's why CGC, when it dumped 48% in 2 weeks, and IAN, this move from 820, now it's a little bit more extreme, but 48, 49% over 3 months. It's a lot more long and drawn out, slow and steady kind of move, as opposed to that absolute flush, absolute V-shaped recovery. So we have to factor that in, that the V-shaped recovery that we might be used to in the high liquid exchanges are not the same as what we're going to likely get on this scenario. I can look back historically and say, all right, what happened with a dump like this on IAN last time? And I had a spot where I was looking. So let's look back here, 450. Monthly support has broken. We'll look at the monthly in just a second. But look at the dump before 450. And one thing I want to point out before that is look at the volume. So the volume was much lower this time around than it was in 2019. And that, in my opinion, is just being more known. I mean, we had US MSOs on CNBC. We had more interest in the space. And you're probably going to see an uptick in volume in the early part of 2019 compared to 2018 for everybody. So the volume is not the same. And that's notable because if I'm looking at how much volume was required to bounce 20% in 2018, it's going to require more volume to do it for the same percentage here in 2019. But let's now look at this move where we traded sideways, just chopped sideways for 2 weeks, and then we dumped and got a flush climax. So here's our chop trading sideways, roughly 2 weeks. What did the dump look like? Big bear dump day number 1, dump day number 2, gap down open, quick little flush, huge bounce underway. So dump day number 1, today dump day number 2. We'll see what tomorrow ends up playing out as, but look at the dollar volume required here. We traded, let's call it 600,000 shares. It was 538,000, but 600,000 shares, if we were going to say that, it would be about less than $3 million. And today's volume is way more than that. So today's volume is pushing 12 million or so. These are just very rough numbers, but it's significantly more. So again, we're going to need much more bull volume to see a percentage bounce. When we bounced off 450, 4 days later, we were up at 648. I do not anticipate a bounce to be anywhere near that strong of 43%. I would say a successful bounce here on IAN gets us back to $5 for just a daily lower high, but if we can get back to $5, that's a 20% bounce in however long it takes to play out, maybe a couple days. Keeping in mind in the back of my head, even though I feel an oversold bounce is the most likely scenario, and I did a good amount of position building in IAN today. I made an initial entry small yesterday, building the core of my position today. I still have cash ready for tomorrow if we see a quick push down or a break of $4. I will be ready with a bit more cash because I'm not out of ammo. I have not maxed out what I'm willing to take on into this trade. So the question is, can we get an oversold bounce? The daily RSI is currently down at 22 if we're going to round here. And where has it been in the past? We have gotten down to 19. 19 is the lowest RSI we've ever seen. Doesn't mean we can't hit lower. And again, preparing for all scenarios, while I feel an oversold bounce is likely, where we're going to see a solid 20% move off the lows, I am going to prepare for the potential of a bear flag. We can bounce to 450 and then drop down and break $4. That's a possibility. Any scenario is possible. We can always drop to a lower low. That keeps me cautious. That keeps me on my toes. And it keeps me from getting blindsided, because if you rule something out as not possible, that is possible and it happens, you're all of a sudden a deer in the headlights and you have no idea how to react and you get stuck. So I built a significant position today, and it was the kind of move today where I start getting the TCG account involved for when things get really extreme, because that is not all just my money. I am much higher risk, higher reward with my own money, and the fact that other people are affected by those decisions that I make, I wait until I'm really sure, and those are really high probability trades that I take. So right now, that account is in the green from today's entries. My account that I entered today is not in the green, and I also have the factored in scenario from, I still have some shares from when the MPX before that deal went through. So that's my longer term position, which again is now going to be adjusted. My long-term game plan is adjusted now that monthly support has broken. Why did I not sell on 450? Because we're so beat up and I don't want to sell at the bottom. And I'm going to be looking for a monthly bounce. When other names are finding their monthly higher lows and seeing a shift, IAN is going to bounce as well on the monthly, but it's just going to be looking for a monthly lower high to be set. So that's a difference between the Curaleaf or the Cron monthly setup and the IAN monthly setup. So again, notable bear break of 450 for the longer term timeframes. Another thing that stands out to me, although the volume is starting to catch up, look at the volume. I would expect the volume to be much higher. Tomorrow marks the midway point for the month of June, and the volume last month was 10.1 million, and the volume this month, it did catch up a bit. When I looked this morning, we were still well under halfway. So we're going to see increased volume this month, but it's not to the degree that I personally would have expected with the size of the dump that we've seen. I would have expected it's a lot more bear volume, but that's really not the case at this point. And again, the volume is still favoring the bulls. The volume on the way up compared to the volume on the way down, not significant. So that shows me it's a lack of bid support and a lack of buyers as opposed to a huge number of shares being dumped. There's a distinct difference. If we're seeing increased bear volume right now on this monthly time frame over the last 3 months, that would be way more notable to me than if we're seeing decreased. And again, it will be higher this month, but hopefully for us bulls, we're going to be looking for a lot of that volume to be some bull volume as well once we do shift things around. But as of right now, the 5-minute time frame has been in a downtrend for 3 days in a row. So the question is, why am I scaling into a position with a 5-minute downtrend for 3 days in a row? Why would I not just wait for a 5-minute trend change? And the answer is position sizing. I cannot enter a position size that I want after the trend has changed. If I waited until the momentum shifted, I could maybe get 20% of the position that I want. And at that point, I'm now chasing, buying at the ask, and it gets really thin once the momentum shifts and there's no one left to sell, and I end up getting a really poor average on the bounce. So if I were trading with $10,000, absolutely. Wait for that 5-minute trend to change. Wait for momentum to shift. I'm not going to nail the bottom, but I'm going to be able to get in and out really quickly with that amount of money. If we're talking 6 figures or more, it becomes much more difficult to do so, and I would much rather make some entries into weakness and build that position. And because of this weakness, I am now able to build one of the larger positions that I have taken in USMJ because of how many shares there are available right now. Supply of shares is aplenty. There's no shortage for supply of shares, and I am absorbing some of them. So I will add tomorrow if we see a bear break. At this point, I'd probably wait for a climax flush of $4 before I would add the last of my bullets as far as ammo for this trade. But we need a 5-minute trend change. 445 and 464 are the most notable short-term resistances. And we also have the scenario where we could see an inverse head and shoulders pattern tomorrow, depending. We bounced 5% into the end of the day, and it was the most significant 5-minute bounce percentage-wise and volume-wise that we've seen at any point during this dump. So that's notable to me. And ideal scenario for me personally, aside from a gap up open tomorrow, which is out of the picture, but it would be an inverse head and shoulders pattern. Let's say we can't break 445 tomorrow morning. We pull back, set a 15-minute higher low. The buyers swoop in, making a play off of the low of yesterday, and then we break 445 to change the 15-minute trend. From there, I would zoom out to the hourly, and I would say, all right, we've got an hourly resistance at 445. We break that level, but I know that for this bounce to get any meaningful follow through, I still need a clear hourly higher low and higher high. So that tells me that I better have my emotions in check to be able to sit through an hourly higher low. Let's say that 15-minute pattern plays out in the morning and we reject from 450, previous support, now resistance, and then we start to pull back on the hourly. I'm going to have to be able to be comfortable holding through that consolidation if I want to see the bounce follow through. And I'll be watching clues. What does the bear volume look like on consolidation? How much of the bounce have we given back? What are the odds that we see this hourly trend change for the bounce to follow through? If the hourly trend changes, I look at it on the 4-hour chart. I say, all right, 4-hour bullish reversal candlestick. RSI is still crushed at 22. RSI has not bounced at all on the 4-hour time frame. RSI has cooled off on the hourly, and it's cooled off on the 15-minute. So that's notable, but I would then look at the 4-hour. I would say, all right, even if we change the hourly trend, I'm just looking for a 4-hour lower high. If this bounce is really going to have follow through, we have to change the 4-hour trend. The 4-hour trend has not changed for the bulls since back here in March, almost 2 months ago. So I have to sit through 4-hour consolidation to find a higher low, and obviously daily as well. Let's say we bounce, we set a lower high under $5, and the higher low and the higher high for a daily trend change would be the best case scenario. And it's a lot easier in the Canadian MJ names with those huge flushes because there is no, you don't have to sit through and deal with the stress of needing to see that consolidation. So again, just looking at historically, when these dumps get going, we hit our low on CGC from this 60 whatever percent pullback in 2 weeks, and the bounce lasted, there was a bit of sweat there, but we went 18%, we went 20% in 2 days with no consolidation. Here's where the bulls are sweating and saying, oh man, is that it? We still kept support though, they still kept those higher lows by 2 pennies, and then that real bounce followed through. So that was really unorganized, but hopefully useful information. My game plan remains scaling out into strength, taking some profit, lowering my cost basis, not going to completely get rid of all shares, but you better believe that IAN is no longer on my good boy list because it broke its monthly support. We will just look for a daily lower high to form compared to 543, And any kind of bounce that's going to get followed through has to change the hourly trend, then it has to change the 4-hour trend, then it has to change the daily trend. And until all three of those happen, we have to remain skeptical because the bears have the trend in their favor. As always, have a game plan, write it down, have it in front of you. If you are newer to trading, you're not playing oversold bounces like this. You're maybe scaling into established long-term positions and cost basis averaging in, which is just fine if you're bullish long-term in the sector. But trying to do these kinds of trades, again, my bread and butter trading strategy of oversold bounces is one of the more difficult strategies. So it requires a lot of experience and a lot of practice, and I do not suggest anybody newer tries to make trades based off of that strategy. Their trades should be based off of longer term time frames and looking for monthly higher lows, knowing that we're not going to nail the bottoms. And of course, IAN's not going to be a monthly higher low, but the other names, we're not going to nail bottoms. So if you are scaling in for long-term positions, you're going to have red positions until momentum shifts. I got nothing else to say. Unfortunately, no weekend video. I'm going camping, and that's bad timing because there is opportunity afoot, in my opinion. So I will do an update for members Sunday night, just checking in and seeing where we stand and what to expect as we head into Monday. But as far as regular old videos like this doozy, 40 minutes, that's a record. We're going to look at Monday as the next time I see you all. So I hope you are well. Have a good Friday and weekend, and we'll see you Monday.